Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500, E-mini, futures, daily chart. Two things strike me. You've got the 2106 to 2107 area, which was resistance on Friday, resistance yesterday, resistance on the continuation chart back in early March. It was the area of the first failure at the weekly pivot back right around March 3rd, and that started the move down to the lower band. Yesterday was a day where the highs were made early in the day, and then we chopped through the middle of the day, and then we traded lower. The bulls had every opportunity yesterday to make a higher high. They had 5 hours essentially to make a higher high before the market just kind of, moved lower, just kind of, succumbed to its own weight, so to speak, and just kind of, gave up a solid 10 handles. That concerns me that we may need to go and test the mid band before we'll be able to get through the 2106, 2107 area. The ideal scenario for the bulls today would be to go ahead and have this 92 low in Globex right around the Europe Open be the low of the day, and push above 2107, retest 2107 as support, solidify that as support, because it has a good opportunity to become a decent floor for a move to upper band, doesn't it? I mean, it's been resistance now for essentially 3 weeks on the continuation chart. If you can get over it and convert it to support, that's a real solid base board, so to speak, on which you can climb to upper band. What the bears want to do is to keep that 2106, 2107 area sealed as resistance, to push back below the middle band, convert the middle band, and especially convert the 76, 77 area, Thursday low, 76.5, Friday low, 77.75, convert 76, 77 to resistance, and then try to push back down to test the lows. What we've very typically seen during the course of this uptrend since 2012 is these are situations in which if the middle band is tested, the middle band tends to hold, and we tend to break through whatever resistance has been hanging the market up, and then we just head back up and do new highs per usual. So the bears don't want the normal outcome. The bears need the abnormal outcome, which would be to crack back below the mid band and go back to the lower band and make a lower low. That would really establish this 0607 area as a distinctive lower high versus the all-time high. And a break of the lower low would open up a move almost certainly to the 200-day exponential moving average. So we don't have a lot of answers this morning, but we do have some very significant scenarios that can open the door to either the 200-day exponential moving average or open the door up to middle band and business as usual. So we'll be watching that. Not a day to make any big bets, in my opinion. You've got to see how some of these key areas react. And the two most key areas on the chart for me are 2106 to 2107 and 2076 to 2077. And how the middle band reacts is going to be a pretty good tip-off as to which one of those areas is going to either be a breakout or a breakdown. Okay, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.